Well, market's still very, very flat at this juncture. Let's see if we're getting more action in commodities. Manisha is waiting by with the first commodity trends. Morning again.
Thank you for that, Lata. Well, yes, the crude oil prices continue to be quite volatile. We did start Asia on a tepid note, nearly 1% on the lower side. 0.25% down is how we are trading right now, and the Indian markets as well have seen some buying come back here. Remember, yesterday we did see some decline in the New York session there, but when you look at this week, it's a second straight week of gains coming in for the crude oil prices. While Brent is up 7%, you have the WTI crude oil prices up 9% yet again for this week. While, of course, there are some concerns about the global demand, and of course, we didn't see anything concrete come out of the US and China trade talks, but then everything else really seems to be working in favor of prices. One, we were oversold, so there has been a lot of buying that has come back with the new year. And then, of course, it is the OPEC-led cuts. It also has to do with the involuntary cuts that we have seen come in from Norway, Nigeria, Venezuela, etc., which has been supportive. And the markets continue to believe. A couple of reports do suggest that Indian demand growth for 2019 will surpass China. There also is a report from Wood Mackenzie which says that $240,000 per barrel of per day demand is what India is looking to generate in this year as well. Those are some of the strong numbers, and we, of course, have seen buying come in because of that as well. The gold and silver prices, in the meanwhile, have also put out a strong week. We have seen the gold prices continue to hold around that 32,000 mark, 40,000 for silver as well. It actually is continuing to hold around 6-month highs for the gold prices. There also is a Barclays report now which says that buying in gold prices for this year is recommended. There also is a Goldman Sachs report which has said that $14.75 per ounce of an year-end level is what they are looking at. 14.25, I stand corrected there, is what they are looking at in the next 12 months for the gold prices. So bullish cues coming in from banks and brokerages for that space. The base metal prices, of course, continue to be volatile, but we have seen a bit of a buying coming in on the lower side. The China data, the producer prices index, has come in the lowest in last 2 years, but the markets are actually taking a note of all the stimulus measures that China is putting out, and that could be supportive. Also, it has to do with some bargain buying on the lower side. Remember, the individual fundamentals do look supportive as China is now looking to cut output for steel, aluminum, etc. because of the winter pollution concerns. And we also have seen deficit continue in case of copper, nickel and zinc. Those are a few metals that you should keep an eye on. Trading strategies, and we have them from ComTrends. It's a buy for gold. 32,200 is the level they are watching out for today. They also have strategies in metal and crude. For crude, it's a buy yet again. $3,755 rupees per barrel is what they're watching out for. And in metal space, it is a buy yet again for nickel, 835 on your radar.
Okay, thanks a lot, Manisha, for all of